everyone. Welcome. Money Show would like to welcome Cody Willard. He's publisher of TradingWithCody.com. He is the chairman of Scutify Apps and the principal of CL Willard Capital. Cody was an anchor on the Fox Business Network, where he was the co-host of the longtime #1 rated show on the network, Fox Business Happy Hour. He was a former hedge fund manager, and his stock picking ideas and economic outlooks have been featured on numerous major financial news outlets. Cody, great to have you here. It's all yours, sir.
Hey, thanks for having me. It's first time I've done the Money Show webinar, though I've done the Money Show several times. How do you switch over to my screen? How do I know whether I'm sharing my camera or my screen? Where are we right now?
So you are currently, they will have both your camera and your screen up at the same time.
Okay. All right. Let's get started. I've got to look. Welcome to the presentation. I think right now actually doing this webinar is probably great because there are a lot of people out there who are new investors who have probably never actually been to a money show and might not be willing to take it serious enough or spend enough money on it to go to a money show. But you can get some education here, and I'm going to do things a little different than probably all the other presenters. I'm not going to give you a bunch of ideas and show you charts and how to find breakouts and things like that. I want to focus on protecting your capital and being careful out there, and the follies that we all fall into. I've made some incredibly dumb mistakes over my career, as any investor has. Anytime I talk to an investor, one of the things you'll always hear is, if I had only, and yes, we've all got a million of those. If I had only done this, that would have happened and I'd be a billionaire right now. That's what I want to think through a little bit today. I'm going to go over here, go to my screen and get the presentation, dismiss. Where do you hit present? File. Oh, well, I think my go-to webinar, there it is, present. Okay, let's start at the top. Don't make these mistakes. That is really what I want to focus on. I don't want to focus on making money today. I don't want to focus on how you guys can make great trades, because frankly, if you've been doing trading much at all right now, on the long side in particular, if you've been buying anything for the last 2 or 3 months, you probably feel like a genius. And there's an old saying, never confuse a bull market with genius. Don't confuse genius with a bull market. You are not a genius. I'm not a genius. Warren Buffett might be a genius, but let's be realistic here. Everything's been going up. Things have been unbelievable. The economy has been not so good, but the Federal Reserve, the Republican Democrat regime, the powers that be have sent trillions of dollars out to banks, to unemployed people, to Apple buying their corporate bonds. This stuff is what can make a frenzy. And if you look at the charts that probably everyone else is going to show you, they're all going to be straight up. They're going to be looking really good. Might be finding some sort of support or some sort of a resistance, yada, yada, yada. But they're all been up. Let's not make some mistakes. Let's focus on that today. You can find out more about me, by the way, at TradingWithCody.com. And since I know that the Money Show typically leans Republican-ish, and I used to be an anchor on Fox Business, I'm not a Republican nor a Democrat, but there's a fun picture of me betting Donald Trump Jr. our inheritance against each other, what the price of oil would do. It was at $125 at the time. He said oil was going to 150. Told him, no way, it's going to the 30s. He said, I'll bet you on that. And I said, I'll bet your inheritance against mine. And that is us in proof. It's on video. I won the bet because oil fell to $33 a barrel 6 weeks later from 125. I don't bring that up just for a funny anecdote, but I also bring it up because that is part of what you might see in many, that is what you will see in many of the stocks right now that are up 500 or 1,000%. Oil at that moment when we're shaking hands had gone from $25 a barrel to $125 a barrel over maybe a year, 18-month, 2-year period. It was frenzy at that moment. And then when the bottom fell out, the bottom fell out. I want to be careful about that. I've got other picks there that you can see. I bought Apple at $1 in 2002 and Facebook at 20 bucks there. But again, we've probably, most anyone who bought a tech stock in the last few years has some examples like this. So I've got more, I'll show you some more examples at the end, but I want to focus on saving you money and making sure you don't blow yourself up. Number one, if you're new to trading and investing, I always tell people, please do not depend upon the markets for your income. If you get in a bad streak, and you will at some point, you'll get your trading system, whatever you're using, for a while, maybe for a week at a time, maybe for a month, maybe for 6 months, maybe the system won't ever work again, but at some point you'll get cold. Those systems don't work in all markets, in all circumstances. And if you're depending upon the markets for your income at that moment, when you're 3 months cold and you haven't made money in the market in 3 months, now all of a sudden you have to tap into that capital that you're supposed to be building your wealth with. And it gets to be really scary, really stressful. And I want to tell you right now, because you're probably feeling great if you're at home for the last month, 2 months, 3 months, and you're a new investor and you're thinking that you could extrapolate what you've done for the last 2 or 3 months out into the future. I'm going to tell you probably can't. It's going to be hard. Can never overemphasize enough. At tradingwithcody.com, I've been saying this repeatedly for the last month as things have gotten frenzied. I can never repeat enough how hard it is to not only make money in the stock market long term, but to keep the money long term. Next lesson I want to share with you. Please don't use a strategy unless you think you can do it for the next 10,000 days. That's 27 years. I run a hedge fund these days called 10,000 Days. And the reason I named it that is because you're going to build wealth, which if you're not in the markets to build wealth, then what are you in the markets to do? Are you trying to get an adrenaline rush? Trying to buy a new car? I don't think that's really how the markets are going to work. I don't think long-term it rewards trying to buy cars with some day trading. You need to be building wealth in these markets. If you're going to invest, if you're going to trade, whatever you're doing, make sure that it is something you can implement repeatedly for the next 10 years, 20 years, and 30 years. Again, otherwise you're going to get cold at some point and blow yourself up. Don't be greedy. Number 3, just don't be greedy. Right now, it's hard not to be greedy. There's the fear of missing out. There's these penny stocks that are going from 80 cents to $16. Crappy companies like overstock.com going from $2 to 40. Of course, it had fallen from 40 to 2. How does it get to 2? How did these stocks get to the levels where you're making so much money right now and feeling like you should be making more? It's probably a great time to be patient and not greedy. It is probably a great time to be fearful and not greedy. Don't be emotional at all. Emotions are the enemy of the investor and the trader. That's the people who were selling at the bottom in March. And maybe you're one of them. Maybe you're not one of these newbie investors who's feeling rich because you happen to sell out and went to cash at the bottom. It was an emotional decision, and it's hard to avoid emotions because this is your money. Put your money on the line here when you invest in the markets. And it's scary to think that you could lose a year's salary if you're on the wrong side of a trade. If you've already, you had $200,000 in the market, you make $40,000 a year. And in March, you were down. Your account had fallen from 200,000 to 130,000, and you were scared it was going to 50,000. That'd be 2 years worth of income. So of course you're going to be emotional, but don't be. You have to be cool. And there will be another time like March when you're going to be scared. You got to have that long-term plan and know how to deal with it. Don't think that the markets always make sense, because they don't. The economy and the markets are two different things, and it is important not to conflate them. Economies can be horrible and the stock market could bubble. Stock market could crash when the economy is great. Over the long term, earnings matter. I use the example of Apple that I mentioned earlier. When I was buying it at a split adjusted $1 per share in March 2003, company was barely profitable, maybe supposed to make 20 or 30 cents per share, split adjusted. Today, they'll earn $15 per share. The stock was at $1 per share. It would be economically, it'd be financially impossible for Apple not to have gone up at least 1,500% from $1 to $15 per share, because then you could at least be trading at 1 times earnings and someone had taken it private at that level. So earnings matter. That's what made Apple go up over the long term. So it makes sense over the long term, but over the next week, over the next 3 months, over the last 3 months, over the last 2 years, markets don't make sense, especially in individual stocks. You know the saying, I'm sure, from the world's leading Keynesian economist, Alfred Maynard Keynes, after all, it's named after him. He went broke several times in the stock market. His stock market theories were just as bad as his economic theories. And he learned that, and quoted, and I'm not even sure it's really by him, but the quote is, markets can stay irrational longer than you can stay solvent. And think again about the fact that Lord Keynes, the economist that so much of the Republicans and the Democrats and all developed countries' leaders use his theories today. Think about the fact that the stock market was too hard for him to make and keep money over the long term. Got busted 2 or 3 times in the stock market, and this guy was a genius. It's hard. Hey, what's the timing here? I'm 13 minutes in. I'll get another couple minutes, 5 minutes here, and get to some questions. The next slide is going to show you some stocks that have gone up a bunch since I bought them and things like that. And I do encourage you to go to tradingwithcody.com if you want to become a better investor. I don't do things like everybody else. I'm not a TA, technical analyst. I'm not copying anybody else's theories or thoughts. I'm doing the best I can, looking at the world as realistically and objectively as I possibly can, and trying to help us make a lot of money as safely as possible over the next 10, 20, 30 years. Most of my subscribers have been with me for 20 or 30 years. Well, let's see, 19 years is how long I've been publishing stuff. 19 years. I have a lot of subscribers that are with me for that kind of time. I'd say 80% of my subscribers have been with me at least 5 or 10 years. Let's put it that way. So let's talk about some of my long-term picks. And even there's a couple of shorter term ones down there at the bottom, because everybody's making money right now. So look, guys, the reason I put the annualized gains and the years held is because I'm trying to underscore how hard it is to make big gains over the long term. I mean, just look at those Apple numbers there. Apple is up 38,000% since I bought it 17 years ago, but that only averages out to 42% per year. And I would be willing to bet that most of you who have been trading for the last 2 months, if you just started, have made 42% in some of your stocks. Those kind of gains are not sustainable. I bet some of you have made 1,000% gains in some of your stocks. I would trim them. I would take some profits. I would be careful. Even in Apple, I'd rather trim than buy Apple at this moment. So look, Google, Bitcoin, Sony, these things, what I try to do, my approach to investing, and if it works for you, I encourage you to come to tradingwithcody.com. And frankly, it should work for you because it's a pretty good approach. We try to find the most revolutionary companies in the world, companies that aren't just disrupting stuff. And we're trying to find companies that are changing how we interact with each other, changing society. And that's the kind of companies and technologies with Bitcoin, if you include that, because it's not a company. These are the kind of things that I've been buying for years. And last year, we added Tesla at 240 before it exploded. More recently, Zoom, DocuSign, and several other names that we've bought in the last few months that, like everybody else, made a ton of money on them lately. We had one loser so far this year, and I sold it yesterday, Disney. Out of 30 long positions, we were down on one stock. That should tell you something too. That's not really sustainable. Not even for the greatest investors ever, not saying I'm one of them, just saying those kinds of gains, 97% hit ratio is not sustainable long term. There's another little picture of that stuff. I guess that's my closing slide. I'm happy to take some questions.
All right, let's see. As far as healthcare stocks, seeing what's going on, who are you recommending? I know there are also, the big race for the vaccine. Who are you recommending in that healthcare sector?
I only own one healthcare stock, and just be careful with the word recommending, because what I do more than recommend is I just tell people what I'm doing in my hedge fund and or my personal account. And we have, I think, just one healthcare stock, and that's a smaller cap stock, one of the smallest cap stocks I own, although a lot of my stocks were small caps when I bought them, they're just not anymore. Dynavax, DVAX, we started buying that a couple months ago, around $4 per share. It's already at $9. I've cut the position by about a third, maybe, or more. And what it is, it's an adjuvant that it's a bet across several different of the vaccines. Whatever vaccine they end up using is probably going to use an adjuvant, which helps. I don't even remember using that. I'm not a biotech guy, but what it is it helps the vaccine, the dose of the vaccine. You can use a much smaller dose, even 10% as much as you otherwise would have without the adjuvant. And that's what Dynavax specializes in. And out of the 150 or 200 serious vaccine trials that are going on out there, Dynavax is in maybe 10% of them. And so it gets you a little bit of more exposure into whatever vaccine might win than trying to pick specific winners, which is also not really my thing. I'm not trying to, if I had spent my life in biotech, I might be trying to find the right one to pick. But no, that's not. I'm trying to find, again, companies that maybe be a platform play in vaccines or in healthcare, not recent vaccine developers.
All right, thank you. Another question from an attendee came in. They're wanting to know, what is the worst trade you have ever made?
Oh, I've made so many. I remember one of the most very painful moments. I'll give you a painful trade and the worst trade. One of the most painful trades was I was trying to buy, this is 15 or 20 years ago, and I was trying to buy 100 shares of a stock that was trading at $42 a share, and I accidentally bought 1,000. And immediately I realized it. And of course, the stock was down 38 cents or 50 cents by the time I reversed it. And it was a painful loss at the moment. But what got even more painful was by the end of the day, the stock was up like 17% or something, and the 100 shares didn't even come close to covering the loss that the 1,000 shares had created moments earlier. Some of the worst trades are when you get the idea right and you get the execution wrong. And so I'm going to take that question and give you another example of something you shouldn't do. Don't use options too often, because, for example, I once, just even more recently, when Tesla was 200s, I had made it my largest position in the hedge fund. I made it the largest position in my personal account. And eventually I had started buying some call options. I dated those call options out 3 or 4 or 5 months out. And 3 or 4 or 5 months later, those call options expired worthless. And 2 weeks later, the company revealed that they delivered, 20% more cars than anybody thought they possibly could. And the stock tripled immediately, and those call options that had just expired had gone worthless. And that's one of the worst trades you can ever make, to have the analysis right and the timing wrong. Luckily, Tesla Common was my biggest position anyway, and we've ridden Tesla now from 200 to 1,500, and knock on wood, taken some off the table. But be careful with options. They're usually your worst kind. They give you the opportunity to have your worst trade.
All right, thank you. And speaking of Tesla, how long is this run? I mean, it is crazy.
It's crazy. What I wrote for Trading with Cody subscribers about Tesla just yesterday was this: that it's very hard to justify its valuation at $300 billion, but we can do it. If you look at over 5 years, the company could generate $100 billion. Maybe 4 or 5 years from now, $100 billion in annual sales. You throw a 35% gross margin on it, which again would be very generous. That'd be $35 billion in gross profit. Let's lop another, half of that out, call it $20 billion in net profit in 4 or 5 years from now. And if you throw a 25 or 30 multiple on $20 billion, yeah, you could even end up with a $400 or $500 billion market cap, which would put the stock at 2,000 or 2,500. Look, more realistically, I never thought the stock would go from 200 to 1,600 within a year after I bought it. I have trimmed it down, and I'm cautious about it here, but this is a company that I do believe will be one of the next trillion-dollar companies, and over the next 5-10 years, I think there's still tremendous upside. There's more risk in the near term with this name than I'd like, but then again, that's just the nature of the game when a stock is up 700% in a year.
All right. Another viewer, they're wondering, do the top 3 American investment bankers control the whole stock market?
Sort of, because look, when the Federal Reserve creates trillion-dollar corporate bond buying programs and treasury buying programs, and when the Federal Reserve cuts interest rates to 0%, that gives the giant banks, not just the top 3, but let's call it the top 7 or 10, the ability to front run, the ability to take more risk, and pass on the risks to the taxpayer. And again, that's part of why you're going to see all of the more brokerage firms report record profits over the last 3 months because everybody's getting rich right now. And if you could front run even just, oh, the Federal Reserve is going to buy Apple and whatever else, corporate bonds. Well, if you're running hundreds of millions of dollars at a bond trading desk at one of those firms, you could easily front run that stuff and just pocket a few pennies that are guaranteed, because the Federal Reserve's literally saying, I will buy this from you after you buy it. Guarantee we buy it from you. So yeah, I mean, there's a lot of corrupt ways, even just all of the emergency measures that the Federal Reserve creates. The Frank Dodd bank bailout, that thing was supposed to clamp down on bank corruption and stuff, but look, they're all in it together. So Republicans and Democrats together pass laws and keep the Federal Reserve pumping trillions of dollars into bankers' pockets, and I call it bank welfare. People are always worried about people not going back to work because they're getting too much welfare, and I'm like, are we talking about bankers or poor people? Because it's the bankers that are spending all of their time gaming the system and front running the Federal Reserve instead of, I don't know, providing banking services, helping capital flow efficiently through the economy, which is what they're supposed to do. So yeah, man, I wouldn't say that the top 3 banks control all of the economy, but they certainly control a large part of it. I mean, not the markets, not the economy, and the economy too, but the banks are getting free money and you're not. Even if you got a little bit, you didn't get like they do every year.
All right, thank you. A couple more here. Someone was actually questioning, getting regular people involved in the markets. Are we seeing, you have the 14-year-old, 15-year-old traders on their apps getting into the market, not really knowing what they're doing? Is that having an adverse effect
Absolutely.
on this?
Absolutely. It is a problem because, well, look, that's who I'm trying to talk to a little bit in this presentation, is not just the 14 or 15-year-old, the 30-year-olds, the 50-year-olds, the people who are for the first time ever really saying, hey, well, I can't gamble on a baseball game. There's no pro sports to throw some money at. Let's buy some fake Tesla electric vehicle penny stock. That's going to be a problem because people are feeling great about it right now, but it won't last. And that's what I'm trying to say is, please be careful. It's really hard to keep money in the stock market long term.
All right. And as far as energy, if you have any thoughts on the energy sector, I know, the big push of hydrogen and a lot of more green companies coming out. Do we see growth in that sector?
I mean, Tesla's obviously a play on that too. I've owned a stock called Solar Edge since it was at $13. It probably about it 4 or 5 years ago, because I think it has the best solar technology, and it's sells modules that go into lots of different companies' solar panels. And I believe that solar is going to be a much bigger part of the future. I don't like wind, too many moving parts. I don't think economically it's long-term as a good place to bet as solar. And I'm not currently short any oil companies, but I sure would never buy a company that's in a secular declining industry. And without a doubt, over the next 10, 20, 30 years, the world will try to use less fossil fuel. And that's a trend I wouldn't want to. I want to find companies that are going to create ways for us to use better energy, not the ones that are just trying to live off of old technology. Sort of like, I wouldn't buy an old car company, you buy a Tesla.
That's a very valid point. Those are still going to be out there. as we can see, once we go all electric, you're still going to have the old school cars that are going to be out on the roads.
And that'll be fun. If you love to drive a Camaro, yeah, more power to you. But the vast majority of us would rather just have the most. I mean, have you driven a Tesla? Even the Model 3. I've got a Model 3. I bought the Model 3 before I bought the stock because I wanted to see the self-driving, the computer, all of the stuff you hear about. I wanted to see it. And the most amazing thing is how fast that car is. And I could still spend another $2,500 and make it even faster just off of a software download. My wife won't let me.
So you got to get in line for the Model Y now, huh?
I've ordered 2 Cybertrucks. One, the very low end version that they'll have out first, and that way I could put that in plastic and never drive it, and I would have the very first Cybertrucks, that one of the very first models that ever came off. And in 30 years, you could sell it as at an auction. You could have a giant drone come to your barn and pick it up and take it out, and it would still be wrapped in its original plastic tarp that I'm going to put it in 30 years from now. And then of course I bought another Cybertruck just because that's what, I mean, come on, dude. Can you imagine driving that thing around your ranch and just running over trees and stuff? It doesn't even matter. It's the coolest, that'll be the coolest car of all time. In 5 years, every car from those old school manufacturers is going to be a variation off of the Cybertruck revolution.
True. You got to get rid of the box.
Man, truly, it's one of those things where function is probably more important than form. And the Cybertruck, they don't care at all about its look. They truly went with how can they make this thing as functional as possible. And then after you look for it a while, well, it actually is sort of pretty too. So there's form to it.
Yep, I agree. Well, Cody, thank you so much for your time today. Fantastic presentation. Hopefully we'll get to see you again soon at a face-to-face event.
Absolutely. And I'll just leave everybody with these words: believe in the betterment of mankind, innovation, technology. This stuff is all real, but now is probably a better time to be cautious and worried about your investments and not bullish and euphoric.
All right, Cody, thank you so much. We'll talk to you soon.
Okay, bye.
Be well.